Hi, hello everyone. A very warm welcome to you. My name is Jan Ling from Kenanga Futures, and I will be your host for tonight's webinar titled Let's Learn About Gold Futures. So thank you for spending your precious time to join our webinar today. It's a joint collaboration with CME Group in our effort to create more awareness and provide education on listed derivatives to the participants. So we have returned with our nationwide campaign, Accelerate into the Future. Stand a chance to win prizes worth up to 50,000 ringgit when you trade Malaysian and US futures contracts from the 2nd of August till the 29th of October 2021. So please take note that this webinar is purely for educational purposes and is not in any form or manner a trading advisory. Kenanga Futures accepts no liability whatsoever for any webinar. So before we start, we would like to take this opportunity to invite you to our next webinar on the 15th of July titled Introduction to Crude Palm Oil Futures and How to Trade It. So an invitation email will be sent again to you. Don't miss out. Please remember to register once you receive the email. Next, if you have any questions for our speaker, please feel free to post your questions through the chat box and we will attend to your question during the Q&A session. To post your question, please draw your attention to the bottom of the chat box. Please click on the text bubble icon and it will switch to Q&A chat. You may type in your questions into the chat box. So today we have Mr. Kamal Aliq here, and he's going to share with us about Comex Gold Futures. So without any further delay, I would like to kickstart our webinar by welcoming Kamal. Kamal?
Okay, thank you, Jen, for the introduction. Okay, hello everyone. Welcome to this session. Tonight I'm Kamal. I'm one of the senior executive, one of the dealers at Kenanga Futures. And tonight I will share, or I will like some sort of brief to you about gold futures specifically. Okay, and this is the disclaimer. As Jen said before, this is purely for educational purposes, so we will not be responsible for any liability or losses. Okay, so for our session tonight, there are few agendas. The first one will be about the basic or gold and Comex futures, and secondly, it will be about factors that impact gold prices. Third, it will be about KDF, and of course, the last one will be Q&A. So let's start. The first one is, so what is gold? Okay, so basically, gold is a metal, a valuable metal that has these characteristics. And firstly, the unique part of gold is basically it's so hard to find, and it's costly and it's expensive for us individually to find by ourselves, so to mine for ourselves. And secondly, it's highly malleable. It's non-toxic, untarnished metal. So it's the aesthetic part of it. I mean, I'm pretty sure everyone globally or anyone that you know would think that gold is beautiful, aesthetically pleasing. Of course, the color of it, there's a yellowish golden metallic color. So this again relates to the aesthetic part of it. And the consumption, basically for the global participants, or should I say the global enthusiasts, gold enthusiasts, basically the 50% of gold consumption is related to the aesthetic part of it, the rings, chains, and so on, and 40% is in investment, because gold is considered as store value, right? So so a lot of even institutional investors have position in gold, and of course 10% would be in industry, which is electronics, medicines, and even cuisine. There's some sort of if you are aware, there's some sort of donut gold, right? So they're eating gold that has been covered in they're eating donuts that are covered in gold in some parts of the world. And these are the major gold demand based on sectors. Of course, even metals, food, buildings, currency, computer chips, and so forth. And these are basically last year's production, gold mine production, in fact, based on countries. So as we know that China, Russia, Aussie, US are among the biggest in terms of gold mining. And these are the locations and global gold mine locations. This is related back to the previous slide. China, Russia, gold, US and Aussie is those are the countries that have quite a significant number of gold mines activities. And of course, if you talk about the largest gold mines, is actually located in Uzbekistan, right? So it is a desert. It's a huge desert actually, and basically these are quite a unique and also distinctive mines. They produce about 1 to 2 million ounces gold annually. And of course, this is just a extra fact. Basically, even for your information, there's actually gold that can be extracted from seawater as well. But it's very small. It's very small, and it's too costly to extract. So it's not common. And of course, when we talk about gold, the supply and demand, right? So these are the top exporters and importers in terms of gold consumption, also exporters for the in terms of top countries are basically importers and exporters. So as we can see that for the exporter side, Swiss, Hong Kong, UAE are the top three basically, and of course the importers, UK, Switzerland, and United States. So as we know that this for the importer countries, these are the top how do I say it? It's top countries that aspired or perhaps that have high demand there basically. So if there's any news that might disrupt these countries in terms of imports, then it can disrupt the gold price and also the gold demand. And so okay, this are basically gold futures contract specification. As we know that gold you can hedge gold by buying or selling gold futures. So these are basically the specification, the contract specification for gold, and basically the trading hour is close to 24 hours, right? It's almost every day, and almost I would say it's very active in terms of volume. And as of yesterday, the initial margin was 9,900. So for you to have engaging one contract of gold futures, you have to have at least a capital of USD 9,900, and the maintenance margin is actually 9,000, which is about 10% of the initial margin. So I will explain the differences between initial and maintenance margin in the next slide. And this these are basically the differences. Basically, maintenance margin is the amount that you need to the equity amount that you need to maintain in order for you not to have a margin call by the banks, also by your broker. So for example, right, this is basically of course this is just an example. We know that initial margin on gold is 9,000, but just to 9,100, but just to make it simpler, we put 5,000 as the initial margin and 4,000 as maintenance margin. So in this example, a customer who wants to engage in gold futures contract have 6,000, have deposited 6,000 into their or his or her account, and then basically he or she initiate the position. And let's say, assuming the price of gold move against the customer by 2,500 in equity value, right? So the account value will be about 3,500. So that is below the 4,000 maintenance margin, right? By 500. So that's basically this customer will basically have a margin call, and for him or her to answer the margin call, he or her has to deposit 1,500 to the initial margin, not the maintenance margin, right? So that's is basically the difference between initial maintenance margin, which is important for you before you try to engage or initiate the concept of gold futures. This is really important. And in terms of the activities and volumes, right? So as you can see here, for the last 1.5 years, the volume has been quite active actually. As you can see that it's the averaging about 2 to 400,000. The peak was 400,000 monthly, and it's easily 200 to 300 100,000 in terms of value on the average. And as you can see, the open interest actually quite stagnant. It's maintained at 500,000 actually, close to 500,000. So it's very liquid, and it's very quite a lucrative market, and it's because of its high volume in nature, so it's very liquid, right? You can in and out within seconds. And of course, the average trading range is about $10, which, as we can see from the previous slide, like one tick is equal to 10 cents, right? So for $10 is equal to 100 ticks lah. So I mean the ranging bound is about $1,000 in terms of the value potentially, of course. And these are other major benchmarks for gold. Of course, we have the London, Shanghai, and of course the gold ETF. And of course, right now we are explaining the Comex one, the US gold futures. So this, of course, these are all the other benchmarks for you to monitor the gold prices. And as this is the price of gold movement for the last 20 years. As you can see, early 2000 it was just around 200 plus. Now it's already 1007. But of course, I think this is like after like 2 or 3 cycles, market cycles. So it's very fantastic for gold. Of course, the next part, why trade gold futures, or why should you hedge in gold futures? The key features for gold, right? Gold futures is basically first, of course, it's very high liquid in terms of the participation, right? I mean, gold is acknowledged as store value, and also the attractive and also the aesthetic part of it globally, right? So everyone knows gold that in terms of, everyone knows that the demand of gold is very high. And of course, if you are engaging with futures market, right, gold futures market, you actually have exposure to the gold market itself, the physical itself, because you can have that flexibility between holding paper asset or take delivery. Because as you know that gold physical delivered, so technically, so you can buy futures contract with very minimal cost. Like technically, you can get the advantage of holding a physical assets, because if you want to buy gold directly, there's a lot of other costs involved, right? So yeah, that's another key features for gold futures. And of course, it's an alternative to hedge against equities market uncertainty or global uncertainty, because basically that gold is it's basically a kind of a safe haven kind of asset. So if there's any uncertainty in terms of geopolitical wars or anything, so it is very good for you to find other alternative, because if there's any uncertainty in terms of political or geopolitics, then technically the stock market will not be performing good enough. And of course, next one is the factors that might, or based on history, is have in correlation to the gold prices, basically. So again, factors and also these are the factors that you can monitor, or perhaps you can take account into if you want to have exposure in gold. Of course, worldwide demand, world economic event is basically what I just explained: in financial crisis, political uncertainty, risky asset performance. This is because as we know that gold is a safe haven asset, so technically it has an inverse relationship with stock markets. And of course the Fed interest rate. This is related to USD as well. Government shutdowns, economic data, NFP, inflation, quarterly GDP or CPI. So I'm going to explain later on about CPI and also the inflation, and of course US dollar currency. Basically, gold has an inverse relationship with US dollar because and also because US dollar has inverse relationship with inflation, right? So assuming if inflation is going higher and higher, so US dollar value is going to keep decreasing. So that's a good opportunity for gold. And then of course the World Central Bank gold reserves. These are basically the stock or the supply. This is an example of the charts that gold price and also the world event, or perhaps the significant events for the last 30-40 years. Basically, as you can see that when there's any factors or perhaps any job that may affect the gold prices, is basically what I just said. Geopolitical, central banks selling gold, so it's quite bearish for gold. And then of course the uncertainty and also the financial crisis of 2008, right? So and Brexit. So, and of course the last year was COVID. I'm going to show you in the next slide. This is US dollar versus gold performance over the years. There are a lot of factors that affecting US dollars in terms of the economic, right? So and as you know, that gold is inverse relationship with USD. So it's in terms of the relationship is very clear. I will show you another chart after this. And as you can see here, this is gold prices versus Dow Jones over the years. And this is the monthly seasonal performance heat map, right, for the last 5 years for gold. So basically, as you can see, the top one is the 5-year average, right? So based on monthly data, right? So so as you can see that early this every Jan or every first quarter usually is a bullish time, right? In September is always bearish, in November for the last 5 years. And the next slide, I'll be showing the last 10 years, which is more significant. As you can see, the first month of the year will always be bullish, right? In terms of the probability, right? So this is of course related to the seasonal factor of the gold. And okay, this is gold price versus USD, right? So it's so whenever there's a the devalued or perhaps the down of the USD will tend to have positive effect on gold price. As you can see, the yellow one is the gold price. The lime green one is USD. So it's basically, as you can see, it's inverse relationship. Of course, as you can see, early of the year, or perhaps like the last the last 2 quarters, right? You can see that USD has been plunging, right, because of the of course the monetary policy and everything in terms of, right? And there's a lot of devaluation in terms of USD. So as you can see, that gold has been spiking up for the last 2 quarters. This is gold price versus fund managers, right? As you know, that fund managers are big buyers, right? Big position hedges. So basically, this is the blue one is the fund managers position, net position. As you can see, if there's a lot of demand in a lot of buying going on with fund managers, right? So there's a little bit will boost the gold prices, right? Because of the huge volume and also its significant player in gold futures or perhaps the gold market. And this is gold price versus inflation, right? So as you can see that when there's high inflationary period, usually tend to have we tend to boost or perhaps to push gold prices as well. But of course, U.S. inflation has quite inverse relationship with US dollars. So there's three factors that you can take a look at. Okay, the next one I'm gonna explain, or perhaps like share a little bit about KDF platform, and then I will share about the market outlook for the gold. Okay, so so for us, so for Kenanga futures, right? If you these are basically the platforms that you will get if you have an account with us, and if you have like if you're keen to have a trading account to trade a gold, this is basically what you'll get in terms of the platform, right? Order ticket, account info is customizable, right? This is a demo account, of course. Of course, it's charting software. Right? You can see a lot of very clear charts on the platform. These are basically the function on all the features of KDF, right? Our platform. So that there are quite a lot of indicators and also features that you can basically write on the chart. So there are a lot of functions there. And of course, in terms of time frame, also the historical data, you have options as well, like from 1 minute to all the way to monthly, and historical data, of course, is for the last 10 years. You can actually see view the charts. These are the synthetic orders, right? Of course, these are quite unique. For example, if you don't have a position, then you want to put a buy or sell position, then and also TP and also stop loss, right? So there's basically a very synthetic order, a very sophisticated order for you to have an exposure with, because basically you can set your entry price, your stop loss, also TP on a single order. So it's very useful for people who are quite busy with their schedule. And this is the mobile app, right? Basically, this is you can download on App Store, also Google Play, right? Basically, you can place order, you can see monitors, see your position, and also your maintenance and initial margin and whatnot. These are another example. These are the charts on the platform. You can also see the functions of it, MAs, MACD, RSI, and so forth. These are basically the confirmation of the confirmation of the email part, which basically after you execute any orders on that day, you will get an email confirmation. Okay, next one, of course, market outlook. I will briefly explain about the fundamental, also the technical, and for gold. Okay, so for fundamental part, right? So actually, in the next half an hour or so, there will be data, CPI data is due to release, like 8:30 a.m. local time for US time. So for us, it's about 8:30 p.m. Right? So of course, this is very crucial, because for the last 2 months, right, CPI data has been quite aggressive, or has been quite aggressive than expected, more than what analysts have been expecting. So it's very encouraging for inflation. So again, if the inflation data becomes more benign, right? So the Fed will feel slightly less inclined to ease its asset purchases, which should benefit gold, right? Because they are they're gonna keep on buying bond purchases. And of course, if the Fed is quite concerned about the inflation, for example, if the data is released later on, it will be much more significant higher than the estimates, then there's a little bit caution sign there for the Fed. So it might reduce, or might be take the relaxed approach to which could pressure gold price. And of course, in terms of the Delta variant, so as of now, it seems very unlikely, right? It's very unlikely that the Delta will have a very significant or perhaps like as significant as the last one, right? Because people are the global have been pushing for vaccines, like vaccine injections as aggressive as they can, and as you can see in the US or also the European countries, the cases have been rising because of the Delta variant, but technically the deaths are quite smaller than what the last round, I would say, because as you can see for the UK, right? I mean, I think in June or August, I say they have like 30-40 cases per day, and death was about 1,000 per day. But now it's the same, 20-30,000 cases per day, but that is actually just a two digit, like 10 to 20 kind of digits in terms of death. So as of now, it seems that the Delta variant, of course, is a little bit globally the whole country, the whole countries have been quite cautious about the lockdown measures and everything. But as of now, there's no significant impact, right? Of course, if there is going to be a slowdown in the global economy, it should be positive for gold. And as you can see on the equities market, right, for the last 1 or 2 weeks, it keep making new highs. Right, Nasdaq have touched new high yesterday, and also Dow Jones and S&P. So they are quite optimistic. Investors are quite optimistic in terms of the market. So that's a little bit that won't be good for gold in terms of the demand short-term wise. Okay, and next one is technical. Of course, there's a huge plunge late of June last year, and right now it's still hovering between in terms of Fibonacci number, it's still hovering between 38 and also 68%. So for gold to have to resume its bullish trend, it needs to break above the 1879 levels, which is the 68% retracement. Of course, at this point, it appears that longer-term perspective may focus more heavily on the bearish trend, right? Because of the huge plunge, so it needs to recover above at least the 68% in terms of the retracement to resume the bullish trend. So and of course, shorter-term strategies may default towards the strength of the basis of the bounce that took place in the first week of July, right? So this has been quite good for traders for the last 1 week, right? Because of the rebound and everything. Okay, I think that's all for my session. Now we'll proceed with Q&A. Jen, back to you.
Well, thank you, Kamal, for the presentation. We hope you found it useful and informative. Okay, we will now proceed with the Q&A session. Our first question is from Encik Muhammad Amirul Asri. Okay, his question was, are gold futures Sharia compliant?
Hi. Okay. Thanks for the question. Sharia compliance. It's hard to say as one answer because basically there are gold futures is physical delivered, like same as CPO and also crude oil. But even for crude oil, there are some scholars or associations say that it's not Sharia compliant. But there are also other associations like Sharia Advising Council for SC, right? For example, saying that CPO is Sharia compliance, but there are also some council that's global councils that have said that it's not Sharia compliance. But of course, in terms of the specification, also how the contract's structured is basically quite similar to CPO. So if you think that there's no right answer, but of course, if you think that that FCPO is Sharia compliance, then you should able to take advantage of gold as well, right?
Okay, right. Are there any more questions from the room? Okay, I think it looks like we have covered all your questions today. Kamal, is there anything you would want to add on before we end the session? Oh, sorry. Okay, I've got one question from Kim Meng. Okay, between gold ETF and gold futures, which is easier to enter and better to gain exposure to gold?
Okay, thanks for the question, Kim. Okay, so in terms of the exposure, like, it's pretty much uh, the same in terms of it. Both of gold ETF and also futures track the physical gold, right? But of course, um, how why is your risk appetite basically, because gold ETF uh, they are not a margin asset class. I would say leverage asset class. So for futures, you need to have put some sort of initial margin, right? So your exposure is actually, in terms of risk, is way higher than ETF, for example. But of course, in terms of the exposure, it's the same. It's just relying on how you want um, to take advantage of the gold movement. Basically, for futures, you just need to deposit 9,900. But of course, the full contract of the gold futures is way higher than that. It, it's I think it's about easily uh 70 to 80K, right? But of course, if you don't have that the capital, then you can have exposure with futures, which is just 9,900 USD. But for gold ETF, it's basically uh, if you have 5,000, then you can only buy 5,000 of gold of units in terms of ETF itself. So of course, your ROI, your returns will not be as great as gold futures, of course. But of course, in terms of the risk, it's quite gold futures are way higher. Of course, it's riskier than ETF in terms of asset class. So to answer your question, yes, both have same exposure. It's just in terms of your risk appetite, which one would you prefer? I think that's the main one you have to consider. All right, thanks.
Okay, another question from Jeffrey Liu. Do you see any correlation with the gold price movement and cryptocurrencies?
Um, actually, this the cryptocurrency is a very huge market, right? So there's when you say crypto, are you referring to Bitcoin, ETH, or any other hot cryptos, because it's very vast, right? But generally, of course, there's no correlation, or at least there's no established past correlation based on, because Bitcoin or perhaps crypto is quite new, right? So in terms of correlation part, I really can't say, because if you talk about USD or US inflation, I can see the correlation in terms of the probability in the last 40 years, right? It is very significant. But for crypto, I don't think there's any major ones, like, at least for sure. Yeah, of course, shorter term wise, there might be some sentiment, but there's no established correlation, I would say, as of now. Okay, thanks, Jeff.
Okay, thank you, Jeffrey. Right, our next question is from Injit Muhammad Amirul. Okay, how is gold futures technical analysis different from stocks or FCPO?
How is gold different? In terms of technical analysis, right, of course, for stocks, there are the numbers of the trading hours are quite limited compared to futures, especially for gold, right? Because gold, basically, if you can see the chart, is almost 24 hours kind of movement. But for stocks, usually it's just 8 to 10 hours, perhaps 12 hours max, right? So in terms of the movement, of course, it is. But of course, in terms of strategy, it should not be way different. It should not be any different in terms of your risk management and everything. But of course, if you look at, for example, just CPO and stocks, right? Local stocks, to be specific. Uh, Stocks tend to have how do I say that? Individual stocks are quite different than the index, right? It's very different. And of course, they are quite for stocks. There are sectors, there are penny stocks, there are blue chips one that move align with the index and so forth. So it is very, they are very individual stocks are very different in terms of the participation, also the volume. But as you can see for futures, like it's a, if you want to trade like a 5-15 minutes chart, it's very continuous and it's very it has a range bound that for you to have exposure, for you to have to engage a position. So in terms of the opportunity, I would say gold futures specifically have way way range in terms of the range bound, in terms of the technical, in terms of the charting part, and of course for gold futures, right, you have the Asian hours are also non-Asian hours. For non-Asian hours, technically for the US it's daytime, so it's very active at night for gold futures, right? But of course, if you want to trade gold futures during the day, is very less volatile, so you have options there in terms of volatility, also um, range in terms of one. Of course, when the US market opens right at 9:30, volume is going to keep volume is going to be high, because it's when the fund managers or perhaps the big players start to buy or sell the positions lah. So yes, I mean it's very different than stocks. I hope that's answering your question. Right.
Okay, next question from Chi Wei Tong. Do gold futures not follow US holiday? Why, let me broadcast the comment. Why during the Independence Day is soy oil not trading but gold futures trading?
Okay, for CME, like you can see in terms of for CME products, for CME futures, basically they are metals. They are quite sectors that they are quite I would say the distinguished I would say sectors into the futures lah. For example, metals, they have metals, energies, indices, and so forth, right? So for each subdivision for futures, right? Indices, agriculture. So US soy oil, soybean oil, wheat, corn are all categorized as within the agriculture futures, right? So for each subsectors of the futures, they have different trading hours, right? So that's why I mean, gold is not in terms of the trading hours. Gold will not be the same as US soybean oil, because they are quite they have a different time trading hours, right? So that, to answer the question, is just based on the timing of the exchange. Of course, there are some US holidays that agriculture will be closed during, for example, Martin Luther King Day, right? But for other US futures, it's gonna be open at half day until 12 a.m. So it is based on the exchange itself in terms of trading hours.
Okay, right. It looks like we have covered all your questions today. Okay, any other further things you want to add, Kamal?
I think I think that's all for me. But
That's all
of
right.
course, yeah. But of course, for you to have for you out there to have any questions or inquiries about account opening or everything, you can basically just email us in terms of that. I think that's all for me, Jen. Thank you.
Yes. Yeah. Okay. Thank you, everyone. Should you have any further questions, please feel free to drop us an email at futuresmarketing@kenanga.com.my. So we appreciate you being here and hope that you enjoy the webinar today. Please take a minute to rate our webinar, and your feedback is highly appreciated. So I will now post the link for the survey in the chat box. Okay, so it's now up on screen. Again, don't forget to register for our next webinar. Thanks again for joining us, and hope to see you again in our next upcoming webinars. Good night and stay safe.
What are you clicking?
Click KenangaFutures.com.my, Malaysia's leading derivatives broker.